Hello guys, welcome to the Trading Parrot. Bitcoin yesterday lost the daily time frame once again, and on the 4-hour, the bulls are doing everything that is possible to produce finally that breakout that we've been talking about. On spot ETFs, we are starting to see some moves for the first time in over a week, and I'm talking about finally some green buying going on. And on the order book, we have a huge buying wall. So yes, the bulls are doing everything that is possible to turn things over and potentially get a bullish November. Now we need to look into the charts and see if they're gonna manage to get that done from over 100k or from below 100k. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. 1,000 likes is always what I wish for, particularly in these days where there's really nothing going on and people are getting really bored of the price action. So we are on a Friday and we are about to potentially put a new CME gap. Like if wasn't enough with 3 CME gaps already to deal with, we have this one at 106.7 and then below the price we have 2 CME gaps. If Bitcoin on Friday started shooting back down for the lower CME gaps to close them during Friday, then we are risking to close at a very low price on a Friday, and that is the recipe to produce another CME gap. And if the dump continues over the weekend, that will bring the price back up. If we rally on a Friday, which is something that we tend to do on recent Fridays, then potentially we can take the existing CME gap at 106.7 and maybe produce a new one on the upper end of the range. That is the most bullish, wishful thinking that we can have. Of course, the higher the price it goes, the higher we can stick that CME gap to the top. That is liquidity that potentially will drag us back up, which is what I take always as an insurance kind of setup. If we just go sideways on Friday, well, we're gonna keep the same gaps there. And if we close any gap over the weekend, that doesn't count, okay? Don't tell anybody, but you cannot close a gap over the weekend because Chicago Exchange is closed. Therefore, none of those orders are gonna be filled if it gets filled on a weekend. The only change is that on the daily, we now have broken that support again. We are going to have to make some adjustments on the daily and on the 4-hour chart. And I thought, what better than doing this together with you? I got tempted to change the charts before starting to shoot the video, but I think it's a lot more easy to understand how do I land there if you see it together with me. So no changes in here, and on the weekly, we are constantly flipping below and above support, same on the monthly. So let's go into the charts. Let's look at the 4-hour, and this has worked so far, but there's a bunch of elements in this chart on the 4-hour, particularly on the RSI, that I am not liking. It's getting just too messy. We have a breakout in here, failed, breakout here, not failed yet, but I'm starting to see a different pattern. I don't know if you can see it, but it's a falling wedge. That is bullish for the 4-hour. Let me make this a lot easier to see. Let's reveal that falling wedge. That is the falling wedge at the moment. You can see a lower low in here, and you can see that we have this resistance. At the moment, that resistance has pushed us back down 3 times in a row, but we are pending from a threat right there, and we could potentially go for the breakout very soon on a Friday, given that the order book is showing signs of interest to hold the price, and that the spot ETF has had some decent move in the green today as well. Now, a rejection heavy in here could put us back down at 20. So what we need to do is put some numbers in here to understand where is the breakout potentially incoming. Of course, this is all speculative. So I'm going to put this line like that, and I'm going to connect this with here, and I'm going to say that it will potentially take longer to get there. That way we get 4 readings, which is precisely the maximum number of readings I can put in here before having to put another reverse RSI in the chart. So that is 34.76. and 1703. There you go. Let's go and check the prices. Remember that the bottom one is the global support already on the 4-hour. The second one is the breakout area. And then in here we have that 77 that I think I'm going to have to get rid of this because we cannot go backwards with the RSI. I'm going to just use the global resistance in here and update where we could be impacting it. This is again just speculative. This could go in a straight line or it could take a month to get there and then it's a different reading. But now it's 83.55. There you go. Let's go and check in the price. Where is that? I think I don't need any more. This Fibonacci thing there, it already failed. So global support at the moment is 93. In order to break out, we need to close above 101.2 now, okay? So we are already seeing that rejection, and if price comes back up in here, it doesn't really need to do a lot to break out. But if we fail, we could come back down maybe before 17. We could come back down at around 21. Just let's have a look at that. I'm a bit curious, 21, where that is. That is 96.3. So between 96 to 93, depending on how long we take to get there, if we go there, is where we have that support incoming. I picked that 17 just because, you know, there's the confluence of the falling wedge. If this takes longer, that is located on Tuesday, so I'm not sure if we are gonna make it there, but anyways. Notice as well that the 4-hour is about to print an extreme of volatility as well, thanks to the cross-P ratio. On the daily, we already had that signal, so all it takes now for the 4-hour is to come back up a little bit, a couple of candles, one or two, and it will give us one of these signals P that you can also see in the past performance. Let's have a look a little bit. Let's browse. How does it perform? You know, it's not perfect, definitely, but it helps you visualize areas of opportunity in terms of extreme levels of volatility to downside and to the upside. On the green is downside and on the red is the upside, where you should be looking into locking in some profits. Now, 4-hour falling wedge, bullish, volatility already below the percentile. Okay, that is great. And people are already kind of positioned on the order book to catch that move. People are already smelling that the volatility went a little bit too far, and maybe that's why they are fishing. In here, you can see yesterday we were hoping to close above the green line. We didn't do it. We put a higher low, and the price put an equal low or a slightly lower, but it's not a pivot really. We need to let the price develop a little bit more to really say that this is any, you know, bullish divergence between three candles. You cannot put a bullish divergence. It's a matter of preference. Of course, to define a bullish divergence, you need two pivots spread away, right? It needs to go up a few candles and down a few candles, and then you get that confirmation. But these two guys are just too close to each other. Still, it's a higher low so far. The candle is still below that support. We could do this and bring this back down once again. We have already done it 1, 2, 3, 4 times, and you can see how it's accelerating. But now we are at 32, getting very close to that global support. Let's get rid of this. Let's place it at 32. Let's remove that line, and we get a breakout maybe at 40. And let's go back to here and let's transfer all of that into the daily time frame now. So we have the 40 and we have the 26.52 and the 32.18. And now let's go into the price and basically break down. Now is the green one and the yellow is the breakout, and that is global support, and the top is the 83 with the global resistance on the daily time frame. So we got at 103 is where the daily is out of the woods and it produces a breakout. Remember, on the 4-hour that was just 101, so we need to cross 101 and we get the 4-hour breakout. 103 we get the daily breakout. Of course, we are not trading breakouts, we are looking for entries around here. I am already in an 111 average and I'm not averaging down in here. That is my decision. But you know, if you are sitting on your hands and you're looking for a humble initial long entry, it could be somewhere around here. I will have preferred below 100k, but maybe we could come back down into RSI 20 and then maybe you can get a lower low with a better entry, better than mine. We don't know what's going to happen after. Remember that this head and shoulder is still in play. It's got a target to 96K. We also have that 93 somewhere at the global reset of the 4 hour. The top of the range on the daily now is sitting at a whopping 180K. That is crazy. That's the highest we've seen on the daily. And the breakout needs to go beyond 103, and we put 180 on the table. That is if Bitcoin does something that it has never done. So watch out with that risk, okay? Not because the momentum can hit 180 here, you are going to say, well, that's for granted. That is just a matter of energy. We are measuring how much we have compressed the spring so far, and we compress it a lot, from 126 to 98K. All that compression is right there. You can feel the physics, and you just release it at 103, and it's got potential to go into 180. But there are plenty of things in the way that could spoil that, so it's not for granted. But if everything goes like a perfect thing now, you could get into 180 and even beyond, because that is the point where the momentum reaches a peak. Price could go beyond that with bearish divergences. Right, the CPR still holding here, no news of that. Let's see if it's gonna break and go to the next one at 88. That is also the target of the head and shoulder. We are not holding 109. We are not coming back above 116, neither that. So we are not invalidating the head and shoulder. It is pretty much settled, and the technical target is between 92 to 88. If we continue like this on Sunday, we could get a stochastic RSI bull cross, but another pinch of support on the weekly. You can see that daily and weekly now continue insisting on moving these lines of support lower and lower. And that should tell you that really the bull market is coming into a stage of no return. The initial line was here, but by the way, this was the initial line, right? Then we have this layer 2 sitting around here. So first move down, second move down, third, fourth, fifth, sixth move down, okay? That is how deteriorated is the momentum at the moment. And you can see it also with the lower highs. It's not just about the lows every time, 6 times in a row breaking down. So if someone tells you, yeah, we are about to start the bull market, gosh, throw them a full pan full of water and ice so they cool down, because they are having some sort of bullish tantrum that is really not worth listening to. And let me correct one thing. We can still pump into 130, okay? I'm not telling you that I have a certainty that the bull market ended. And this is not me being coward. This is me talking about the probabilities. The probabilities of doing that are the slimmest ever in the cycle. That is the reality. That is a fact. What I cannot tell you is whether we are going to go into 130 again. All I can tell you is that a month ago, the chances were 10%. Now they are 2%. If you want to trade with that and take a big risk, that's on you. We are also below the 50, and we need the general markets to do something positive now to bring back Bitcoin above that. Otherwise, Bitcoin is reacting to general markets and thinking that we are entering on a bear market on general markets too. And if that's the case, of course, Bitcoin will puke, as we were expecting it to do if the general markets did that. Now, I want to show you something. This is a bit of opium, so you don't feel that bitterness too much. When you eat too much sour food, some people need some caramel, something really sweet to compensate. I think Argentinian people do that, Chilean people do that, French people do that. I don't know. Tell me, in your country, do you end your lunch and dinner and then you need something sweet? Well, answer in the comments that, and in the meantime, I'm gonna tell you that this is the way it was looking entering into the bear market from the point of view of SOPR, people taking losses. Very important to understand how people took losses when we are there in a bear market, because that's going to give us a perspective of what to expect in the cycle. Just past performance, not precise, but something similar. So this one didn't go to bear market, and you got blue, green, 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 green. That means that we pierce sometimes just the white line and sometimes the yellow line. These are percentiles in the oscillator, and one is extreme and the other one is less extreme. So green is less extreme, blue is very extreme, it's the lowest band. And in here we pierce green, green, blue, here blue and green. And think about But if all you can trade are the signals, how will you trade this to not get wrecked? That is your homework. In here as well, in here as well. Now let's go back to the future and let's see where we are. Okay, this kind of rhymes with that, right? So far we get a green, green and blue. There is a green in here. You can stop the video and go back or look at this and see currently where are we standing. And I think this corrective move managed to push us back down into almost under 30K. Then we rally into 48K. And we got 1, 2, 3, 4, 5 pinches of SOPR. 5 waves of people losing and closing at a loss and realizing, capitulating. In here we have had 1, 2, 3, 4 in a row with not substantial move up. Well, yeah, this one counts. This is the all-time high. So from all-time high, just to be more precise in here, we got those 5s on the left. And from the all-time high in here so far, we have 2. So I don't know if that is very reconforting or very sweet. I wanted it to be, but we got that blue there, and that blue in here was just before getting this one. There's also a blue there as well. Anyways, whatever the case is to start DCAing down in here for a potential dead cat bounce or for a potential new all-time high is a tough task, okay? That's kind of the takeaway, along with the fact that if you average down these 3, you can exit there at a profit. If you average then later these 2, you get that one to exit too, but sometimes, you know, you could get caught if you don't trail it properly. We are below the support on the monthly. Now we are below 102.6. That is not great. We are at the bottom of the top bottom weekly model for the full history of Bitcoin. We have only broken down this in the 2022 bear market. Never before, and we are right there at weekly support. Price is 100K and we could week below it, but then we should come back up. If we don't come above that line, I'm gonna be forced to make this wider like that. And then that band is 0.40. 0.40, it is located a lot lower. It is located at 76K, okay? So if we have to take in consideration this as the new bottom of 2022 bear market, then this guy needs to get into 75. Does that mean that the bottom of the bear market could be 75? No, don't get so optimistic in here, because you can hit that like we did in 2022, and we can hit it at 22K and still get a capitulation at 15K, which is 7K lower. How do we do that? Well, this guy starts diverting in going into a bull market from that bottom at 22K, and he puts a higher low at 15K. That divergence in here in the volatility calls for the beginning of a bull market. So you can literally go into 75 and then continue to put higher lows and still put lower lows in the price and find your actual bottom of the next bear market at lower prices. The short-term holder realized price today is 112.4. So we are trading pretty much 12K plus below it. We have done that plenty of times during this cycle. You can see it in here, 1, 2, 3, 4, and this is the 5th time. And of course, you're gonna get plenty of people saying, well, we're just gonna reclaim it just like we did in historic price action. But that when they say historic, they refer to the bull market. They never look at the bear market because, you know, engagement is a lot easier when you are always a perma bull. So here it is. This is positive. We have a 239 on a Friday, reverting 6 days of outflows from ETFs. Those have produced some damage in the cumulative flow, but it still looks pretty positive in my opinion. We are in extreme fear, and that together with that reversal on the spot ETFs could be a good signal. We are in a warning buy area. The thing that, you know, the elephant in the room now is this liquidity sub 100K is very heavy, and we know that the peak ends at 97 to 96, but really if you condense all of this up until 92, this is a lot to take, right? Try to look at this silhouette and compare it with that one. So of course the market maker has some damage to produce that is kind of a low-hanging fruit. Going into 117, yeah, sure, in the past 3 months that is great. From from CoinGlass perspective, but do not get tricked. There is a lot of liquidity at 97. In long term on trading different, you got the bucket of 2, 3, 4, 5, and yesterday people were voting where do we go first, and many people were saying we go first to 1. Come on, I ask which one we go first. Do we go to 1 on the upper end and then to 1 on the lower end? But people reply we go to 1 first. So I couldn't understand really what you guys mean. Be more specific than that, please. If you want to get access to trading different, there's still a couple of days of this big discount. So instead of paying $450, you can pay $320, or instead of $240, $179. But you need to use the link in the description to get that benefit. That sub 90 here shows us the biggest pool on CoinGlass, not really on trading different. On trading different, the biggest is 97, and in the past 30 days, we got now 112 and 114. Both of them will put me in profits, but I remember yesterday the biggest at 30 days was 116.3, and probably because that's out of the range that we can see in here, we are no longer seeing it, but still it must be the biggest. So we got that buying wall in here. We got that buying wall from 98 to 100k, very close proximity to the price. They might be expecting some positive thing. Maybe it's to do with the information coming from the unemployment rate coming soon. The expectations are to keep it just steady. Maybe someone knows something, and that's why they are making the order book look so much bullish at the moment. Bullish, but of course it can be just a rug pull. We do not blindly trust all that. We just appreciate that there has been a shift. It's been quite a few days where it's upside down. There's a lot of ask liquidity, and today for some reason in extreme fear we get spot ETFs and demand coming in the order book on Binance futures. Let's see what else we can find. We have the CBD that still has a lot of people selling. Aggressive sellers are dominating still. Longs going sideways. They're all allocated. They came from low here. So we got a plenty of longs, plenty of shorts, and the battle is gonna define what happens right after the event. The event is gonna be at 1:30, so just a couple of hours UK time. The oscillator still doesn't want to enter in my opportunity area for taking a long. It's just there, a few percentage away from it. This is how the order book looks. Look at this, guys. Up until 10% away from the price, the bulls are defending amazingly. The only exception is 0 to 1, where it's actually flat, and then 10% and below we have a lot of resistance, and I suspect that that comes from orders that are located at top of the range. But interestingly, they have been rug pulled, so we no longer have the 130, we no longer have the 126. The resistance is currently at 110. It's been switched down. We can see that up until Monday 3rd of November they were up there, and then they flip back down, and now I cannot really see them there, which again, there is a divergence between what I find in High Block Capital versus what I'm finding in Market Monkey Terminal. In terms of longs, today we still have plenty of longs in here. Remember that being above 70, it's quite bullish, and it tends to defend better the price most of the time, not always. That together with the extreme fear could be a great bullish signal. Let's look at that delta. Well, the order is very shiny in here, so that means that there are lots of bulls. Those bidding orders are still there, and 224 of shorts are at risk. Open interest is primarily located at 111. Let's reduce this a little bit and see what's the second biggest order. It just got taken out at 101, and then we have one at 121. Very difficult to see. Let's look at the fair value gaps. We have plenty of areas to go to the upside, so really price has now no easy choice. We got all the upside up until 120 for recovering and defending 100k. That is what these bulls are currently defending, and we have plenty of carnage to experience up until 83, 84 if we had a big dump in here to the previous range. So we do need to take very easy averaging up on the long. If you enter in here defending the 100k with the rest of the herd, be careful as well and be open to the idea of needing to average down even lower or getting stopped out, depending what is your risk management preference. I still see the aggregated open interest not breaking down, but if anything changes, I will let you know. Now, I'm gonna record the summary. It's 11:30 a.m. and that summary is gonna go live immediately, just 3 minutes video that is gonna go to my YouTube and Patreon members. And at midnight UK time, it will go publicly for free to everybody. Thanks so much for watching. I'll see you in the next one. Take care. Bye bye.